Bitcoin hit 108K today. Trump is already doing some fun things even before the inauguration date. Then there were UFOs in New Jersey today, and CoinMarketCap is trending in the App Store. So that only means that it's about time I record an intro to crypto. And let's get started with what crypto is. So, crypto is just a form of digital money that is secured by cryptography, and it is a form of decentralized money. That means that it is not maintained by any state or any bank, and it is instead decentralized, and the people just agree using cryptography and consensus mechanism on that. So there are some key characteristics like decentralization. That's basically the fact that there are a bunch of nodes that are maintaining the state of the network and the public ledger, usually it's public, of all the transactions. So everybody knows what wallet is doing what. However, because this is happening, it is very secure because there are so many copies of it. Then there is a security mechanism called the consensus mechanism. That's how people agree, and these nodes agree how and in what order transactions are happening. There are two popular consensus mechanisms called proof of stake that you likely heard of. That's like Ethereum, and proof of work, where you have miners and where you spend electricity, and that's what you've heard of for Bitcoin. And then the other thing that I probably should have mentioned first is a blockchain. It's not a new technology, but it is the backbone of all cryptocurrencies. It has been developed in the past, like in the 90s, to my knowledge, maybe even earlier. And it's used now not only in crypto, but in like supply chain management or something like this, which requires like a steady state of events to be kept. And then the last but not the least thing that is very important for every cryptocurrency, and that is its tokenomics. It is what describes its distribution, its total supply, and how the supply is going to enter the market during the whole cycle of the cryptocurrency. It's particularly important now during the bull run when more and more people see it more as an investment or a speculative asset rather than a technology. Because when there is a bear market, you're basically in it for the tech. Bitcoin, for example, is famous for its Bitcoin halvings about every 4 years and for its limited supply of about 21 million Bitcoin. Ethereum, on the other hand, does not have a capped supply, but it has a different way of regulating its tokens. And every cryptocurrency has its own tokenomics, and it's something you should do your research on before investing into any cryptocurrency. This video is not financial advice, and I don't recommend you to use it as anything like that, but it is just something to point you where to do your research. Now let's go over a brief history of cryptocurrency and some key events that made it what it is today. So in 2008, Satoshi, the infamous Satoshi Nakamoto, he or she, whoever that is, published the white paper, the Bitcoin white paper, and in 2009 we had the first Bitcoin transaction. Then many people think that Ethereum was the second cryptocurrency. However, it is not the case. The second cryptocurrency appeared in 2011, and that was called Namecoin, and it used a technology called merged mining. If you ever wonder and want to get deeper into the trenches, you may research merge mining as well. Then, in the same year, we had the appearance of Litecoin, which is kind of a Bitcoin sidechain that is still existing and still popular today. And after that, let me check, in 2013, we had the launch of Ripple. And Ripple is, it's finally hit $2 this cycle. And that's, I feel like people have been waiting that for 8 years. And it finally happened. I'm very happy for the Ripple holders. Best of luck to them in the future. And actually, in the same year, in 2013, Dogecoin launched. And we also have now the wrapped version of it that's called Shiba Inu that you might have heard of. But Dogecoin is like the OG one, and that's the one that Elon Musk keeps promoting all over. And there were some rumors about it being connected with some Twitter payments, which Twitter is not supposed to have. And then in 2014, there was the first big blow to the crypto industry with Mt. Gox exchange collapsing. I don't know how to pronounce that name. If you know, please let me know in the comments. But that was the Tokyo-based exchange that handled most of the crypto trades and handled 70% of all Bitcoin transactions. It collapsed after hackers stole $460 million, which was, again, a huge blow because the industry was literally just starting out at the time. It was very novel. And it only started paying out its creditors in July this year. So it was a whole decade when people were without funds from the Gox. And I'm sure many people have large losses, and you can see on Twitter sometimes it is mentioned. As big as that blow was, we saw a big, very pivotal event in 2015. That was the launch of Ethereum. The whole revolution of Ethereum was the launch of its EVM that allowed for not only transactions to happen in crypto, but also decentralized applications to be built. So people could build smart contracts which allowed for a very vibrant DeFi or decentralized finance system to go around and spread. And so many tokens started launching after that. And then in 2017, we had this ICO launch or initial coin offering that was like the boom of ICOs when projects were doing token sales, when people could invest very little money into a project, into a token, then see it surge during the bull market and sell it off. And by coincidence or not, that was also the year when the first bull market started. And that was when Bitcoin hit $20,000 for the first time. And then in 2020, there was another big major event. Just like in the Earth history, I think there was this Cambrian explosion when a bunch of species appeared. So in 2020, there was this DeFi summer when the total value locked of a bunch of DeFi ecosystem projects surged from 1 billion to 15 billion in just one summer. So that was huge for the ecosystem, for the whole like crypto ecosystem, I mean, because it was so young at the time. So that was big numbers, even though right now we're over the trillions. Then in 2021, we saw the NFT boom, and that was when all the Bored Apes hit their enormous numbers, and that's when all the celebrities jumped into the train of that. And that's when Bitcoin hit the 69,000, its new all-time high. And that's also the year when El Salvador adopted Bitcoin as its legal tender. Some people thought it was stupid to adopt it as the all-time high. However, as you can see, Bitcoin right now, it's 108K, so maybe it was not that dumb after all. But of course, it could not continue this good for this long, and in 2022, we saw the collapse of FTX, a major crypto centralized exchange at the time. If you haven't heard of it, I would be very surprised, but that was a very big blow to the industry that brought up the cryptos all scams again, and a lot of people lost their money, and a lot of the altcoins also went like down 98 or 95% from the all-time high. So many people lost their hope in crypto completely. However, then in 2023, we saw like the warm up with the big companies and industries filing for Bitcoin ETFs and for some other ETFs that they tried. Some of them started being approved by the end of the year. I had a video about Bitcoin ETF timeline that you can watch. I'll leave it in the cards. And there we came to 2024. There we are. In the end of 2024, some people started like it started off being very bearish. However, as we got closer to the end of the year and to Bitcoin halving, which is often connected with the bull market, that's where we kind of started seeing more of a warm up. And here we are now. And Bitcoin is at 108K. And let's see where it goes in the next couple of months. Now let's briefly touch on the different ways cryptocurrency can be used. It is, of course, mostly when it's a bull run used for trading and people are like, oh, crypto is going up, let's go trade. So trading is one use case, of course, but I hope that you don't think that's the only one. You don't just go into shitcoins straight away. There is also investment. Crypto is sometimes seen as a store of value, especially Bitcoin as its digital gold. Then there are also use cases for cross-border payments, and that's actually a very big one, especially with stable coins denominated in USD or Euro sometimes, but mostly USD and XRP actually. People use that to send money. Let's say they earn their salary somewhere and then they send it over via crypto to their home country where people may be unbanked, and it's much easier to open up a crypto wallet rather than a bank account. There are also different niches in crypto that are like GameFi. That's the connection of games and crypto. The games can be integrated with crypto on different levels, just like some in-game assets, or also just the whole games being built on blockchain. The other thing is DeFi, that's decentralized finance. That's basically different tools like leveraging, trading, lending, borrowing, all that kind of thing with your crypto stuff. There are also NFTs or non-fungible tokens. That's basically used for mostly art at the moment. However, there are future potentials for it to be used for something like ticketing platforms, or something like tokenized real world assets. So, tokenization of real world assets is a particular narrative of this bull market. It has not been as popular in the past, but it is something that people are looking into. The other niche that is also rising in this cycle is particular is zero knowledge. So, zero knowledge is also an old technology. However, it was kind of crossed with crypto not too long ago, just a few years ago, and people started building out different types of applications using zero knowledge, and that could be used for something like digital identity to be stored securely. And speaking of this storage, there are actually projects that are specializing in data storage on blockchain as well. So that's like an alternative to a Google Drive. So there are a bunch of different ways cryptocurrencies can go to, and the tokens most of the times are just used to pay for the services that those projects are providing. I mentioned a lot of developments and exciting things that have happened in crypto from its beginning, but it's not without its risks, and crypto is famous for its volatility, which is very much true. It's known for cycles as well, but it's still very volatile even within every cycle. There are no guarantees of any returns, there are no guarantees of anything right now. The industry is still very young and not settled in, and we are still yet to see what's going to happen to it. And we are very dependent on the regulations, which are different in many countries, and the majority of cases, they are not even set in stone. So make sure you know any kind of tax implications before you start investing into crypto. And yes, you also have to be aware of any kind of hacking because many teams can be anonymous when they develop and just launch their application. You put in some funds in there, but they can just rug you. And that is, of course, always a possibility. And that becomes even more important as you go into the bull run when more and more new people are joining crypto. This is not financial advice, but here are a couple of steps to help you get started. So, first things first, do some very basic research. Just watch a couple of YouTube videos at the very least to understand your risks, different types of exchanges, and how not to lose money completely in crypto and how not to get scammed. Then you will need to install a wallet. That can be a browser extension. I also recommend you to have a mobile wallet extension that is my preferred one. Those are called hot wallets. There are also some things known as cold wallets, which you likely are not going to need for some time if you're just starting out. Cold wallets are more important if you have very large sums of money involved in crypto. Then, lastly, you need to choose the exchange you would like to interact with. There are two types of exchanges. For beginners, I would probably recommend to stick with centralized exchanges, even though they're not to be known crypto native. They're kind of looked down upon by some people, but they are the most convenient thing to use at the moment with a fiat money on ramp and off ramp in a very easy way. So, choose your exchange and keep an eye on the different jurisdictions that those operate in, because in many cases, in the majority actually, you would have to pass a KYC or know your customer procedure to log into your crypto exchange and trade on there. And make sure to research any tax implications for investment, because in the US, for example, people are paying many taxes if they're using the centralized exchange. Other than buying crypto, there are many different ways to get your hands on some, and that's actually what I prefer personally. I rarely buy crypto, so I just do random things and try to earn my way into it. So the first and most straightforward way is participation in testnets, because there are a bunch of them. So the testnets are usually incentivized. You either get points or almost directly tokens that you can claim post mainnet or get an airdrop for participation in the testnet. Sometimes they are clearly stated that they're going to be an airdrop, sometimes they are not, but in many cases, projects really try to reward early users. So try to find some cool projects early and participate in their testnets to help them out. Then the other thing is ambassador programs. Ambassador programs are, especially if you don't have any technical skills, are useful so that you can go ahead and do some social promotion on social media or create videos like I'm doing. And that's how I tried and got my way into crypto actually with a bunch of ambassador programs. Then airdrops are actually mostly farmed by on-chain activity. So the more on-chain activity you do, mostly in testnet, but some projects have mainnet airdrops as well for most active users. Then there are also play-to-earn games, which don't have a very good reputation because in many cases they are like a pyramid scheme. So be careful with those. However, there are some fun, and if you enjoy playing the game, that's, I would think, the only way you should go into that game. And you should not expect to earn too much from a play to earn game. And then there is freelancing because some companies are paying you in crypto, especially some crypto companies. And as the bull run starts hitting more and more and harder, projects are going to receive more funding. So likely there are going to be more job offerings in the crypto industry. And the salaries are actually pretty good quite often. So I would recommend you to look into that too. Or even do some freelance again, as I said. Those can be one offs and people pay you in ETH, for example. The other thing is participation in the consensus mechanism of the protocol. So you're actually a participant of the maintenance of the whole blockchain thing. So there is mining that you can do that involves spending electricity and having some hardware, or staking. Staking is a proof of stake consensus mechanism, and there it involves buying up a bunch of tokens before then, and then locking them in, and then getting kind of a yield on that. And the last but not the least is yield farming, where you're basically providing liquidity to different DeFi protocols. So you allow people to use your money, and for that you get a portion of the transaction fees. For example, that is for Uniswap. Uniswap is an app where people swap their tokens one for another. For that they pay a fee, and as a liquidity provider you get a portion from that fee. Sometimes those fees can be pretty high and you can earn a pretty big yield, but usually the yield, the highness or like the amount of yield correlates with the amount of risk that you're taking. So the higher the risk, the higher the yield. So I would recommend you to be careful with very small projects. That's all I wanted to tell you in this Crypto 101. All my knowledge that I tried to push into here probably added too much detail for some things and not enough for others. Either way, if there is something else you'd like to know about, put that in the comments. I would be glad to chat with you about that. Thank you very much for watching, and I'll see you in the next one.